Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce to the Bless Y'all with another video here on Blessed to Invest. And today I want to talk about a investing topic that a lot of people use. This is like the most common way to invest, and it's called dollar cost averaging. If you're not familiar with the topic, it's also called DCA, dollar cost averaging, where what you're doing, you're investing in the market and you're adding a consistent amount of money every single week, but it's just on a consistent basis where you're averaging a price. So let's say you decide to dollar cost average at $100. So what you're going to do, you're going to pick a consistent time to put in the market $100. What you can do and what matters with this is it doesn't matter what the market's doing. If the market's up, you're going to put in $100. If the market's down, you're going to put in $100. And what it does is, let's say you buy the market at 150, and then you buy the market at 100, and then you buy the market at 50. What it's going to do is going to give you an average price of $100. So if you're consistently going into the market, it's going to average you in slowly to the market. And what it does is, one, during the fluctuation periods of the market, because we all know the market goes through upswings and downswings. During those swings, you're going to get an average price instead of just getting the worst price you can get. You're going to get a consistent average price where you're not worried about timing the market, because we know a lot of people are not able to time the market. When you look at a lot of hedge funds that go in and say, oh, I've got 20% returns on the year, 30% returns on the year, when they compare it to the market over time, usually they underperform it. So it's easier just to get into the market, consistently get in, and then understand that you're not going to beat getting in consistently going. If you go into like hedge funds and stuff, you're not going to be able to beat it consistently. So this is considered the best method to go in. You can also use the method of lump sum investing, where you put, instead of putting $100 in a month, you put 10 grand in and call it a day. With that strategy, putting just 10 grand straight in, the odds of you making more money are a lot higher, because the market tends to consistently go up over time. If you're able to hold it in there for 20 years, 30 years, you're going to get a better return. Because if you get in at $100, 10K, you're good. But if you put $100 in consistently, you're not getting, your average price may be a little bit higher as the market is going up. So that is the downside of dollar cost averaging, because your average most likely is going to go up because the market is going up. You're just putting $100 in. But for those investors that just need to get into the market, and you have working a 9 to 5 and you can't put $100,000 into the market immediately, this is going to be the best bet for you. All right. So looking at a market like today, when we're currently in a recession and the market's going down, dollar cost averaging is going to be one of the best bets. This is probably one of the best opportunities to dollar cost average right now, because the market is so low. We're under 20%. We're in a recession. The market is coming down. So if you were to dollar cost average today, currently, you can start getting in at very good prices. So your average is going to bring it a lot lower. So people that are on the fence about, oh, should I invest? Should I get in? Should I get out? Whatever. This is probably the best opportunity to dollar cost average. You can do this on any broker. You can do it on Fidelity, Robinhood, whatever. You just give consistent money to the market. What I'm doing personally, I'm going to be doubling down on my dollar cost averaging. So I'm going to be putting more money into the market currently just because it's down. Averaging maybe a couple hundred, I was averaging like a couple $100 a month. I'm going to double or triple that into the 401k that I'm working on, because just the prices are so low. And I know if I were to get in now, I would be in a great position when it continues to go upward. So this is great for me, for my mindset. I don't know when the bottom is going to be. It might go down to 50%. It might go down to 60%. We might have a 70% drop. We don't know. But if I'm dollar cost averaging in, I don't have to worry about timing the bottom. I can get in at, I think it's at like 360 right now. I can get in at 360, and then I can add a little bit more at 320. Then I can add a little bit more at 300. Then I can add a little bit more if it gets down to 2 in the 2s. I can continue to add into the market. So it gives you some skin in the game, where you don't have to worry about getting that bottom price, but you know you're in there. And if it keeps on going down, you're going to get a good average price into the market. And you're going to be able to skyrocket your returns once it goes up. So I recommend dollar cost averaging for every investor, even for the day traders out there that really like day trading. They're going to time the market. They're going to be swing trading, because with the market, it's not about how much you put in. It's about time in the market. The time in the market is going to be more valuable than timing the market, if that makes sense. You getting in, staying in, and riding the wave as it goes up and down, and it's going to take us some time, but it's going to go in an upward direction, versus timing the market, trying to get that bottom price, trying to get that bottom tick and stuff like that. A lot of people just cannot do it. It's a skill that majority of people just don't know how to do. It takes a lot of time. And even if you get good at it, you're not going to be perfect at it. It's just the mind of markets. We never know the direction of things are going. You can see Chase. We have like a lot of analysis out there that are saying, oh, this is the bottom of the market. And some other expert says, oh, this is the beginning of the bear market. This is the bear beginning. Like, no one really knows where this market is going. So get into the market. Time in the market is going to pay off. Dollar cost average in. Take some time. Take a consistent amount of money every month, every week, whatever you can afford to do, and get into this market, because I think this is this is a great opportunity to get in. We're in a recession. We're probably going to be in here for another couple of years. So take as much money you can, divide it up, and really dollar cost average in. So if you have any questions about dollar cost averaging, like why should I do it? What should I be about? How do I get started? Let me know in the comment section down below. And I can chop it up with y'all and explain in depth, like how to get on like certain brokers. And I'm also going to link to a couple of videos, how to set up your brokerage account, how to do that. But that's going to wrap it up for the video today. It's been your boy, Blessed Applesauce. Stay blessed. Let me see y'all next time. Blessed on this.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.